Thompson, real estate broker with the Pioneer Group, and I'm here today to talk to you about FHA mortgages and why that might be a good loan program for you to use today. I brought my good buddy back in again, Jason Jean, the Mortgage Machine, to talk about FHA mortgages. And so, Jay, tell us a little bit about, well, first, welcome. Always a pleasure to have you back.
Always a pleasure to be here, Don.
Okay.
Thanks.
Okay, so we're going to talk about the FHA mortgage. It's not a first-time homebuyer program, right? It's for everybody.
That's correct, and that's one of the things a lot of people say, well, geez, I'm not a first-time homebuyer. I think just because it starts with an F, that's what kind of most people think. But you do not have to be a first-time homebuyer, so don't rule that out as a potential loan program for you. We use FHA with a large variety of buyers, and that's because it is so flexible. It offers a very, very low down payment, which does change over time. So contact us if, to find out what the latest requirements are for that. But a very, very low down payment, a 30-year fixed rate that's also very low. And oftentimes it will be lower than what you see in the papers, because what you see in the papers typically are for conventional mortgages, and sometimes those are actually higher than the FHA mortgages. Of course, contact us for the most recent, up-to-date rates on that. The mortgage insurance on the FHA has changed over time. It does go up and down. So again, you'll have to contact us. But the mortgage insurance is typically a little bit higher with really good credit than a conventional mortgage or some of the other types of government loan programs. So that's one of the things that we take a look at, and that can either pull you in or pull you away from the FHA mortgage. The other great thing, and we use the FHA mortgage for this a lot, is because of the fact that it allows your down payment to come from a gift, and that's actually very rare. Most loan programs, they require you to put let's say 5% of your own money into the transaction at certain loans of values, but FHA doesn't have that requirement. So 100% of the down payment can be from a family member. Of course, we have to document it properly, so make sure you take a look at our video on assets. But that's a huge.
So define your money to our viewer here, because your money. Well, let me define it the way I define it, and you tell me whether that. Basically, the lenders are going to look at 2 months worth of bank statements, and they don't want to see any large deposits. So if you're going to put a large deposit in the bank, you want to put it in the bank. You're going to get a bank statement. You can't use that bank statement. You need 2 bank statements showing that money in the bank. Then the bank will consider that money your money. Also, if you were to sell an asset, say I've had clients who sold their motorcycle and took the money from the motorcycle and used it to buy a house, but they had a title to the motorcycle. Again, it comes to documentation. Title to the motorcycle, a bill of sale, arm's length, so don't sell it to your brother or your father because they won't count that, right? And put the money in the bank and document it. Tax returns, your own money. But what do you got to do? You pretty much got to document that it is your money, and you really should put in, it makes it a whole lot easier if you put in the exact amount. Because now you don't have to explain how you took half the money and did something with it. At least deposit the whole amount.
Yeah.
Am I close?
You're 100% accurate. I mean, everything today is documentation because the person who audits your file in Washington, and this is a federal government program, they don't know who you are. They don't know who I am. So they're just looking at our paperwork that we've submitted. And so they're making sure that we're following their guidelines. And so if we don't have the proper documentation in the file, then, we can all get in trouble. We don't want to do that. So that is, we have to source every single, deposit that's significant.
When you say significant, what would that be? Out of the ordinary?
That would be, typically out of the ordinary, typically a little bit larger than a couple $100.
Oh, okay.
But it's all dependent on what is normal. So you can't really say that this is exactly how the underwriter is going to view it because everyone's different. But obviously, if you make it, $3,000-4,000 a month, and you see a $10,000 deposit coming in, we need to know where that came from. So those are the types of things, and that's why some people are saving cash today, and cash is an unacceptable source of documentation. So a lot of people need to utilize their relationships with their family members to come up with a down payment, and that's what FHA does allow us to do. So it's great. And then
Okay.
the last thing is on FHA is that we're really looking for is the property. Okay, the property condition with government loans tends to be a little bit tighter than its conventional counterpart. So things to look for on FHA, they're looking for any type of chipping paint that are found on homes built prior to 1978 because of the potential for lead. So we'd have to scrape and repaint that to close on the loan. The roof needs to have a couple of years left. If there's any other safety issues like a railing missing from a large stairway, those typically can be picked on, and those are the things that we have to get done prior to closing generally. Okay, so make sure if you are an FHA buyer, you have that FHA mortgage pre-approval in hand, you're going out to look at the properties, make sure that you are also keeping an eye out for anything that could be safety or structural issues in nature, and that'll potentially save you a lot of money in the long run.
Okay, so to recap, don't have to be a first-time home buyer. You could be a multimillionaire buying your 10th house as long as you don't have an existing FHA mortgage, right? Because you can only have one of them. Is that correct?
Yes.
You can only have one?
Yep.
Yeah. You can use FHA mortgage to buy a house. You don't have to have any of your own money. It can be 100% gift. And the property has to qualify. We're basically talking about condition and safety issues that are obvious to an appraiser. And just to say, because you'll hear many people say, the FHA inspection. By no stretch of the imagination is it an inspection when the FHA appraiser goes out. He's looking for obvious defects in the property, nothing that's hidden. He's only going to be there 15 minutes, so it's not an inspection, does not replace your inspector, but it is a great program for people who qualify for it. So, anything else there, Jason, or...
I think we pretty much covered it. Obviously, there is a lot more to these things, but we don't really have that much time here. So be sure to check with us for more information.
So thanks again, Jay. Appreciate you coming in for your insights about the mortgages. And for more information about home buying and the mortgage process, please visit our websites below. Please also like, share, subscribe to our channel. And to your success, this is Don Thompson, real estate broker with the Pioneer Group. Have a great day.